Dow Jones rose 0.71% on Tuesday, closed at 34,152 points, continue to try for fifth straight week of gains. At the same time, SP500 rebounds and hits three-month high but blocked near the 200-day moving average. Since April, the index has never been able to close above it. It closed slightly up 0.19% after big retailers like Walmart and Home Depot beat second quarter corporate earnings estimates. Consumer goods and consumer goods sectors lead SP500 gains, as far as Walmart, despite cutting its profit guidance last month. But better than expected earnings data proved the strength of spending in the U.S. market. Home Depot, amid rising interest rates and high inflation, achieved record profits and revenue. This surprised the market, but as housing sector shows signs of slowing, its earnings results could be interesting. Bed Bath & Beyond, another retail and souvenir stock soars. Retail investors have driven heavily shorted stocks higher over the past few days on a clear bear squeeze. This is similar to last year's GameStop and AMC. Also, Target and Lowe's to report Wednesday. On the other hand, after Citigroup downgraded Zoom Video Communications Inc. to sell from neutral, the information technology sector also fell. In addition, Apple announces layoffs of more than 100 contract recruiters. As part of previously announced layoffs, these projects have an impact on the Nasdaq 100. The index closed with a slim loss of 0.23%. In addition, in an environment of rising interest rates, U.S. economic data on Tuesday continued to be mixed. After yesterday's disappointing New York manufacturing index, better than expected July industrial production, capacity utilization surprises investors. Federal Reserve report shows U.S. industrial production rises for first time in 3 months. The increase in output was driven by strong growth in motor vehicle production, driven by the easing of semiconductor supply bottlenecks, and successfully offset declines in home electronics, appliances and furniture. On the other hand, housing starts data soften. Look back. Slowing CPI and manufacturing activity with mixed signals, strong industrial production, weaker housing, strong consumer spending and still tight labor market. Fed officials should be given room to think at September FOMC meeting, but in the short term, all eyes will be on the July FOMC minutes released in the early hours of Thursday. Whether the Fed will signal a slower pace of rate hikes will be at the center of investor debate.